Well, as promised, let's focus on the next company, Caplin Point. That's the stock in focus. It's down in this year, actually. Stock has struggled a little bit, but know that the company has plans for 15 project launches in FY27 and is eyeing new markets such as Mexico as well as Chile. To discuss this and more, we're joined by Mr. Vivek, the Chief Operating Officer at Caplin Point Labs, who joins in. Hi, Vivek. Good morning. Good to see you in, as always. The year has been a little rough for a lot of mid-cap companies, but you're eyeing better plans for the next year. Let's focus on the top 3 points, though, that we're going to be talking to Vivek about: the US market outlook, acquisition roadmap for 2026, and expansion plans, GLP-1 drugs. That's going to be top of mind. Well, Vivek, let's kickstart with the recent news flow then. The company's US arm, Caplin Steriles, where it was granted final approval for Linezolid injection single dose. If you could tell us what is the potential of this particular approval and also what's in the pipeline for the coming year.
Yeah, so we've been getting approvals at a good speed recently. We've got about 2 or 3 ready-to-use bag products approved. And in the next 3 months, we're also expecting a couple of more niche and high-value products coming through. And the idea now is to make sure that we execute and launch them as close as possible. As you would have seen, US continues to grow very well for us, both in our B2B and our own label in the front end. And we need to make sure that these newer approvals maximize our earning potential in the quarters going forward.
Okay, got that. So if we look at some of the trends going forward in terms of more launches in the US, what's the pipeline looking like over the coming few quarters?
So we have already about 40 plus products approved in the US. If you look at our numbers compared to what we were about 4 or 5 years ago, you will know that our R&D and regulatory potential has been very well established. In fact, the market average for getting approvals for products is around 25 to 28 months, whereas our average is anywhere between 14 to 15 months. So we're doing well in that direction. We're also actively working on the inorganic route as well, acquiring ANDAs from outside. We've already done a few, and we're at late stage to acquire another 10 plus products, hopefully in the next quarter. So this should really augment our growth going forward. Next 18 to 24 months is going to be a very interesting period for us, not just for the US point of view, but also for Mexico, Chile, etc. But yes, I think US is growing at 25 to 35% on an average, of course, at a small base. But the important thing about this growth is it's a good quality growth, where the bottom line numbers is very comparable to the parent company, which is already at a fairly decent level at 34-35% when it comes to EBITDA.
So you're expecting your US business to keep growing at the steady clip of 25 to 30%, right, Vivek?
We expect that in the next 2 to 3 years at least. And we're also expanding capacities and our plan, taking into account these newer products coming through. Hopefully in the next 2 years, we expect to be top 3 or top 4 in India when it comes to overall capacity at our plant when it comes to injectables.
Okay, one more point. You mentioned that you're looking to acquire more ANDAs. You have 10, I think, that you're looking to snap up. Now, with respect to acquisitions, because you do have a fair amount of cash on the books, over 1,300 crores, is this going to be utilized only for the acquisition of these specific products? Or are you looking at, a more strategic acquisition of a company or an entity?
Yeah, so we're sitting on fairly good reserves, and that's going to go up. In fact, every year we're able to put away anywhere between 300 to 350 crores of cash from our regular operations itself. At the end of this year, we're looking at anywhere between 1350, 1400 crores of cash. And we are certainly looking at something inorganic. Nothing is advanced right now, but to the point where, we as a family hold around 71% of the company. We are not against diluting a little bit of that to make sure that we're able to sign off on a much larger ticket size as well. Doesn't necessarily to be ANDAs. ANDAs don't really cost that much, but something that fits in with our line of growth, Latin America, distribution, even something in the domestic market. These are all things that we like very much. It sort of fits in with our expectations on where the bottom lines, cash flow, everything which are very important for the company needs to be. So we're not shy on writing a much larger, acquiring something much larger as well. If you consider what we're able to do with our surplus and with also our high holding on the promoter side, the parent company.
All right. Vivek, just to clear that point, you were just mentioned something about dilution. What is that? Dilution in which? In the listed entity or the holding?
Yeah, so right now we're at about 71%.
Yes.
So something meaningful comes in, and that requires a much larger ticket size. We're not against a very minor dilution of our equity as well. So in fact, we were looking at something similar to this about 3-4 months ago, but eventually that didn't pan out because we didn't understand, or we didn't really find that the future forward-facing numbers look encouraging. But we're not against this, is what I'm saying. Many people have asked us this question as well.
Yes. I have my ear to the ground as well on this point. So a potential size of dilution that you all would look at, you're at 70%. The company is close to around 15,000 crores of market cap. So what could that quantum of dilution, if you get the right opportunity, what is the quantum of dilution you could be looking at? And by a dilution, you could mean a QIP, a preference issue, something on those lines?
Yes, all options are on the table. We're not against doing anything between 5-10%. That would probably be, between 71% and 61%, we don't really find there to be any difference at all, as long as it's something meaningful for the company. So obviously from a promoter's angle, some people are very sensitive towards this, but we know that being part of a larger pie makes better sense for us as a company, if it comes to that. But the most important part is it needs to be something meaningful. It needs to be something well run and something that really fits in with our growth targets and numbers that we're already able to show right now.
All right. So the potential acquisition size, going by the kind of dilution that you're talking about, could potentially be in the vicinity of what? Around 800 to around 2,000 crores approximately, the acquisition target? I'm just doing a back of an envelope calculation. You're at 15,000 crores of market cap. You wouldn't mind coming down from 71 to around 61%, which would mean there will be fresh shares that will be issued. So back of an envelope suggests that maybe 1,500 to 2,000 crores of equity fundraising is what you could be looking at. Will that be a fair estimate?
Something like that, and even a little bit bigger as well, is something we could do next year. But again, remember that we're not close to doing anything. This is just a statement that we are making, that we're not against something larger when it comes to inorganic, but it really needs to be within what values we stand for as a company, what numbers we're comfortable with. Yes.
Interesting. And you're saying that you're going to be getting various approvals, in place as well. What about growth trajectory and steady state margins? Two of the most, simple details that we ask for. Getting into FY26, almost halfway we're done. But getting into FY27 as well, what should the growth look like with and without the inorganic growth?
Yeah. So at this point, this year and next year is going to be very important for us because we are putting down the building blocks for many of our growth levers to really fire up after 18 to 24 months. Some of them are the continued progress that we make in the US, our entry into Mexico, our entry into the oncology business, and also our expansion of presence in Chile as well, and early entry into Brazil as well. So all of these things will start to take shape in about 18 to 24 months. Until then, I would say that we'd be at high single and low double digits when it comes to the overall company. But 27, 28 and beyond looks quite promising for us because many of these things that we are working on will start to take shape during that time.
Okay, all right. We will leave it on that note. Thank you very much for joining in and giving us a sense of the business. Wish you a very, very happy and prosperous 2026.
Thank you.
That's Caplin Point.